It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID live stream, Series 20, Episode 4, that is Episode 118, starts here. Let me start by just apologizing, ladies and gentlemen, due to a few infrastructural issues that emerged in what were very, very busy travel schedules this week. I'm delighted to say our guest, Andreas Schweitzer, is here. He is going to be recording this show with me. It's currently actually Monday, the 25th of September, because alas, we were not going to be able to do something at the live time. So sorry we're not live today. We really appreciate you watching, and do please leave us some love when you're looking at this show so that we can get it up through the AI algorithms. Now, what's been happening in the world of exchanges and markets during the course of the last week? Well, as we have been explaining in BitCarnage, our Substack on crypto market structure, the world of crypto has gone for a whole new paradigm shifting model. It's what we call E2E, or indeed preferably E-SU-E. It's the point at which literally everybody in the crypto business sues everybody else in the crypto business. The only question now is, will Junior complete the circle? Are we expecting to see SBF suing his parents over the FTX affair, having attempted to blame everyone in the entire planet, or at least in the distributed planet of distributed ledger, except for himself to date? BitCarnage and E-SU-E is also covered, of course, in our main newsletter, Exchange Invest. More details at exchangeinvest.com. Where the big story of the week was the Tilly-Dally. The Tilly-Dally was a rare instance of a parish CEO being, well, forcibly removed by his board. In this case, it seems devoting more time to his personal than professional life was the undoing of SIBO CEO Ed Tilly. Oddly enough, lots of merger speculation suddenly emerged, even though there are actually no qualified buyers for SIBO who are not going to run into antitrust, barring arguably CME. But then the deal wouldn't seem to meet their criteria for value addition, apart from ego in the case of unifying Chicago. But then again, the future of Chicago markets, surely they may not be in the loop, given the municipal desperation for taxation and indeed the wanton crime wave of the Windy City. It's not quite a wanton crime wave, but the CFTC, the Commodity Futures Trading Commission, are stumbling from bad to worse under Chairman Benham. The latest embarrassment, refusing prediction market Kalshi the right to run political prediction markets, where CME, for example, is allowed to willfully trade binaries already under the separate permissioning system that CFTC has allowed it. One rule for the big, not one rule for the innovative small players, alas. There is a rich irony in the United States of America where the gerontocracy is often bamboozled by the criminals of crypto, yet the political elite balks at a simple financial human right to be able to hedge human political risk. Our guest today is not talking about hedging human political risk. It's a much more exciting topic still, trade finance as an asset class. Andreas Schweitzer is the managing director of London-based Arjan Capital Ltd. It's a UK FCA regulated trade and corporate advisory firm with a focus on factoring, supply chain financing and payment mechanisms in complex jurisdictions. In 2020, Andreas founded Artis Trust Invest, an EU-regulated trade finance investment company for invoice discounting and short-term supply chain financing. It's authorized by the Liechtenstein Financial Markets Authority. As a Wall Street Journal best-selling author, Andreas's latest book, TradeWorks, The Trade Finance Investor, has recently been published with distribution by Simon and Schuster, and a crackingly good read it is too, for those of us trying to learn more about the wonderful world of trade finance. Andreas, welcome to IPO-VID. Where in the world are you today?
Patrick, thank you very much, and greetings from London in England.
Greetings from London in England. If I may ask, where do you come from originally, Andreas?
I'm a Swiss that exiled himself to the UK. I'm a Swiss citizen born in Germany, and whatever I say it with a Swiss-German accent.
With a Swiss-German accent. Well, it's wonderful to see you today, and it's always good to have another good Swiss-German accent on the show. One of the world's leading and ongoing great centres of finance throughout history, and particularly also, it has to be said, in facilitating trade. So tell me a bit about yourself, Andreas. How did you manage to get into the financial business in the first place?
because my father told me when I was a young man, 18 years old, that was in 1978, my son, if you want a safe job, work for a Swiss bank. Obviously, that would have been said differently today, maybe, after all what happened. So I went 2 years in banking and realized that for some reason, I'm not made for that. And I ended up a few years later with an industrial group in trade finance. Little did I know that I do this still today or again.
Well, it's a fascinating area altogether, isn't it, trade finance? I mean, one thing I notice from the outside, I'm not particularly involved, is the only thing we ever hear about trade finance in the world of entrepreneurship and trade is actually generally complaints, because in lots of jurisdictions, it's become incredibly hard to secure trade finance through a lot of established banks. Is that a fair opinion, or is actually trade financing booming and I'm just unlucky enough to hear the people who are not having the best end of it?
No, I think sadly you are you are spot on, and that's when we entered the trade finance and factoring market now just around the pandemic. We realized that especially the Mittelstand, the SME, the small medium enterprises have a very hard time to get financing, and a large company normally doesn't have that issue. A large bank will lend the money on the strength of the balance sheet. But the trade gap, according to some Asian bank, is now about 3 trillion. I mean, this is 3,000 billions, a staggering amount. And I think banks don't want to deal with small transactions. It's too costly, maybe too complicated. And that creates a certain amount of misery for every company that doesn't have a strong balance sheet. So we are only looking at the deal. We are not looking at the balance sheet of the company. We take the trade as security. So it is an as good business as many others. And I would even say it's a very safe business, and should be much more popular in our view, also as an asset class.
So essentially, you help facilitate the trade, and then you actually fund it through your fund, but at the same time, you're overlooking the paperwork to make sure that it all makes sense. Is that right?
Yes, that's. I will use your quote. You put it so well together for us. This is. We are not brokers in that sense. Deals come to us, but we want to take ownership of the deal for the duration of the transaction or for the duration of our risk. So we take ownership on the goods until they are paid, to put it very, very simply. And sometimes we get a guarantee from in Spain, where we trade pharma, we get a guarantee from a large insurer, which is state-owned. In other cases, which we get a down payment, which obviously a buyer will not want to lose. So normally these trades go through, and we never had an incident at all. And we are now represented in 75 countries in the world with our own agents.
Wow, that's pretty impressive. So obviously, I mean, you've got quite a large investment in here, because just building the network of agents across 75 countries, having the experience of these different jurisdictions, because every single one has its quirks, I'm sure.
Yes, very much so. For example, we have a partner in the US, and they run the US business because it's such a different environment, philosophy, legal framework. You have other compliance, you have other bank restrictions. So you just have to create hubs. So the US business is a US hub, the European business is a European hub, and we do Europe, Middle East, and Africa out of Europe. In Asia, we haven't been particularly active. We are, for example, not in China because we don't have the knowledge. So we very much like to really know where we are and what we do. And that's the best protection for ourselves, for the buyer, the seller, and any third party investors.
Yes, well, I was very struck by, after we went through the preface and the opening papers of your book, you started with a chapter which was actually clarity in the process breeds confidence. And I think that's so true of electronic markets. The more clarity we have, the better things come. Is trade finance still a very opaque business, or is that improving?
You can, the technology is there and the knowledge is there that it can be extremely clear and transparent. When it's opaque or when it's unclear, it's sometime by design that the buyer or the seller simply don't want to keep their cards close to the chest and not reveal their sources and not their prices. So it's basically the opacity comes from the trade secret rather than anything else. But technically you can put contracts on blockchain. I mean, there's great technology around to do that. You could do payments with coins, you can do payments with fiat money, but the BCG, Boston Consulting Group, made a comment on a study on factoring that, contrary to popular belief, where you would say 75% should be on hard facts like price and products and margins and risk, it's really the opposite. It's 75% are soft factors. Who do I know in the trade? How do I deal with someone? Where do I get a deal from? And that's, I find, the sparkle of the industry.
Yes, it's very interesting. I mean, even our own limited experience with importing and exporting, people are so important. If you can actually find someone that you know and you feel you can trust, that's certainly the basis of a deal, certainly for smaller entrepreneurs such as us. And it's really fascinating when you build that forward. So let's try and understand a little bit about this process overall, which you talk about in your book. Roughly, if we're taking an interest as, say, an investor, I mean, where you're coming in as the agent and the investing fund and so on into a transaction, how long is the usual kind of window or windows you expect for this trade finance transaction?
Again, this depends, various companies to various things. We have friends in town here who would finance minerals that are still in the ground. That's a risk I don't think we can manage, and admire anybody who does. Other companies say we don't do transaction for less than 20 or 50 million because it's simply not worth, you need a few containers full of cars in order to make it worth. We like the niche business, and because this is exactly what the big guys don't do, and we don't want to compete with large companies. And it's so broad of an area still that everybody probably finds a good place to do their part of the deal. So if I can walk you through something. So I take
Please.
my money and I put it in the fund or in an SPV. That's what I did and continue to do. And that money goes then into a bank account. And with this money, we buy a product or a receivable. So even we buy the invoice that is often insured by credit insurance in case the buyer has an economic default. And so we buy this invoice and with the insurance, and 90 days later, the buyer pays. We get our money back with a premium, and that closes the transaction. Now, you can do this for 30 days, for 60, for 360 days. We have decided that we like 3 months best. And that's normally what you need, even if you ship something across an ocean, normally 90 to 100 days. That is fine. The other way we do now, we buy the product. For example, we buy steel, we buy pharma products from the seller with a down payment of 25% by the buyer, and we finance the 75% in the middle. So here we don't have a guarantee. Our guarantee is the collateral of the product. You don't do this with bespoke products. So we don't do it with fresh foods. We don't do it with hardly even fashion, because if you have a delay something and something gets out of fashion, or you have the bananas don't arrive yellow anymore, you have a problem. But we can do it with chairs, you can do it with industrial good, you can do it with any solid industrial good.
That's fascinating. So obviously one thing which hit the headlines, I mean, a couple of years ago, was when that man unfortunately decided to do what looked to me as a car person like a handbrake turn in the middle of the Suez Canal, and it all went horribly wrong because super tankers aren't made for those sorts of things. How does that impact upon your business? I mean, that was a huge mega headline glitch, but obviously there are problems at ports. There are other issues where you can have delays in the supply chain. Is that a big factor in trade finance?
Yeah, and the whole obviously the Suez situation just demonstrated what if something like that happens, if a large ship blocks a vital route like the Suez Canal or the Panama Canal, what this means. It means the ships have to go around the Horn of Africa or have to go around Argentina, 6 weeks more travel, seriously more cost. And in our way of supply chain and our lean way of operating, I mean, companies have to close down if they don't have stock delivered every day or every other day. And industry has realized that this has now become too big of a risk, because it's cheaper to hold more stock than suddenly you have to shut down your operation because you're out of door handles.
Mm-hmm.
You cannot sell a product like a car without handles.
Yes, and in
So
fact, I
a
think
simple
Toyota,
example, I
a
agree.
simple, yeah. Well, I think Toyota had exactly that problem just recently. I can't remember why, because of some supply issues around Japan. And it is, so it's fascinating. So therefore, obviously, you can have an issue where there can be a delay to your transaction taking place. And I understand, therefore, that's why you don't like to be dealing with perishable goods such as fresh fruit, or indeed even fashion, where particularly fast fashion can go out of fashion so quickly. But clearly there's
You
still a
have a
market.
maritime insurance, of course, if these
Okay.
happens, but still a delay is a delay, and it disrupts the business. So,
Yes.
and that's why people also take production closer and say, let's make sure we have a local supply and we rely less on too many third parties within a supply chain. So
Right.
reduce counterparty risk.
Reduce. And so tell us a little bit. I mean, when you're looking at trade finance, obviously we're all kind of aware of, as you've talked about it, these huge bulk carriers, the Panamax that are taking stuff all the way across through the Panama Canal, through the Suez Canal, and so on. But clearly, a lot of your financing for trade finance must also involve probably much less glamorous, for want of a better term, trade logistics. I mean, simply stuff moving from Europe to, say, North Africa and so on. Does that dramatically affect the way that the trade finance actually works?
No, the shorter the routes, the better. For example, we also have transport, for example, within Spain. We finance a buyer in Spain, for example, in the farmer market, and we buy in Spain also. We now also export from Spain to other countries, but that is more or less across Europe.
Right, right. Very interesting. And so how does it work in terms of how do you manage to achieve confidence in, I mean, you've a whole chapter devoted to it, trade legality. How do you manage to get confident about different jurisdictions? Are there, in fact, jurisdictions, you've mentioned you're in sort of 75 countries at the moment. Are there jurisdictions you just don't like working with?
I mean, you need, for example, without our US partner, we would not be in the US for the simple reason we don't understand this market, and this market needs a full setup on its own. So if you go to a market like that, same like China, we don't deal in China today simply because we don't have any business demands with China or from China. But if I would want a Chinese team.
Right.
In the middle, you also have to look at jurisdictions, because there are countries. If you are not a local national, you have a disadvantage in court by default.
Right.
So these countries, and there's no need to name any, you want to be careful also.
No, but I
or
mean,
you
on the
want a
other hand,
collateral outside of that country.
collateral outside. I suppose the way we can answer that question is to look at the positives, which is one thing I
Yeah.
think actually the European Union has done. And as viewers will know, I'm somewhat of a Eurosceptic, but one of the things the European Union has been very good at doing is actually leveling the playing field. And having been in court in, for example, the Republic of Poland, where I am today, I can readily report that one of the first things that a judge said in court on one particular occasion over a minor trade dispute was, understand, this was to the other side, that in the courts of the Republic of Poland, all citizens will be treated equally, no matter where they may be citizens of in the European Union or beyond, which is heartening stuff, because you're right. I mean, there are certain jurisdictions, some of them not even geographically that far from where either of us are sitting in Europe, that can be more dubious and difficult to transact with.
Yeah, the rule of law is of course important, and we would always want to be in countries where we can rely on the system. But the even more important thing is the parties need to have skin in the game. So we would never finance 100% of a transaction.
No, that's very interesting, because actually, I mean, you talk a lot about Spain, and I find it fascinating because you do a lot of business there. It works very well for you. But in fact, one pointer I've noticed on the ground in Spain is that a lot of Spanish merchants struggled to trust each other. And there was huge amounts of indebtedness built up in, say, the mid-late 2000s, which caused all sorts of financial problems because people in Spain just weren't paying each other. I mean, corporates to corporates. And that caused huge amounts of problems. So I'm fascinated at how you've managed to make sure that everything works well for you. And obviously having the trusted partners in place and the insurances and so on are vitally important.
Now we pay the parties, so we take the risk and we get an insurance. But this is, I just mentioned Spain because we happen to have an own quite a team on the ground. But it applies also to other markets. And you have countries like Spain where banks are even more hesitant to give out money than maybe in France or in Switzerland or Germany. If you're a trade company or if you're an industrial company, you have a pretty reasonable chance that your local Sparkasse in Germany or your cantonal bank in Switzerland will fund you. There's more money available. So different markets react differently, and that's why you have also different rates and in different markets. Brazil is another very interesting and fascinating case, and a huge case. Nigeria also. Would I now rush to Nigeria? Probably not, for the only reason that we don't have Nigerian knowledge.
Yes.
So if we don't have the know-how, we are not in a hurry to go there.
No, I can understand that. But you made a couple of very interesting points, because, I mean, you talked at the very start when you were talking about the Mittelstand and obviously their problems. Certainly the perspective, I suppose, from the Anglo-Saxon standpoint is that Germany, Switzerland, those nations have definitely got a better orientation towards trade finance. I worry a great deal about, for example, actually the United Kingdom and its banks' approach to small and medium enterprise funding for trade finance. Do you find, therefore, your sweet spot is really in those countries where the banks are more reluctant to be part of the trade finance network?
Yes, of course. Otherwise, who needs us? We are willing to finance the trade. Banks finance a balance sheet. But of course, there are banks who finance trade and they just don't share it because it's a very lucrative business. So we have to, for example, there's come across a trade finance company which we were looking at, as we do often. Are they a competitor? Can we cooperate? Okay. And that company said very proudly, if you have a good credit rating, we give you money. It's a bit like saying, if the sun is shining, we are very happy to give you an umbrella.
Yes.
We want it back when it's raining. And we don't look at we don't look at the rain. We are just dressed differently for the bad weather. We say our issue is the product. If I have a buyer and if I have a guarantee in form of a down payment and an insurance ideally, and some form of payment promise or whatever the guarantees are one can achieve, then we're probably quite happy to do that transaction. But we're also not spot traders. We don't do wheat today and corn tomorrow, and from Azerbaijan to Uganda. Or, we try to do repeat business with parties, and you help a company to structure their finance, and that creates a good bond between all of us, and they rely on us that we fund them, and we rely on them that they do what they said, and I think this is why our system works as it does.
No, that's very interesting, and you explained it very, very clearly, so it's easy to understand. But obviously, I mean, one issue as well, we've talked about the legality and obviously breeding clarity in the process. And your book goes on very, very elegantly. And I loved chapter 5, actually. I think that's the best part of the book I've been reading, because obviously we all love a little bit of 007, although not in our business dealings, ideally. It's lovely to read about and fascinating and interesting. But you mention the issues of trade espionage and villainy, and you go through those. And clearly from one country to another country, and they may both be foreign countries, or at least one of them may be your home country and the other may be a foreign jurisdiction. How does one deal with this trade espionage and villainy? Because you've got some great stories to tell.
This is probably coming back to your opacity. I'm not telling anybody what I'm doing, because it's easily copied, and you can have any NDA or non-disclosure agreement you want. Once the genie is out of the bottle, yes, maybe some other party deals with your suppliers and get leverage on you. So that's not an issue of legality, that's an issue of practicality, and I would say business discretion. Mm-hmm. And on the legality side, I mean, we have a trade finance lawyer in-house, we have a risk manager in-house, and we have chief operating people here. Trade finance needs a lot of scrutiny, that things are done as they are supposed to be done, and you need to follow up constantly. You can't and you shouldn't rely or trust any situation. You have to monitor it on a daily basis. On the transport side, on your warehouse, on the financial side, and if a receipt is missing, we would not pay out, or we would go and get the receipt, or ask why the receipt is missing. Sometimes there are valid reasons for something. So control.
Well, from that point of control, I'm going to take back control for just a second, because we're going to look at the book of the week and give our guest, Andreas Schweitzer, an opportunity to catch a drink and have a brief rest. But as you know, ladies and gentlemen, as one of the things which Exchange Invest produces, as well as our Monday to Friday subscriber newsletter, the Exchange of Information, the Bulletin of the Bourse Business Daily, on the weekends, we also have a free newsletter, which is often about more macro topics throughout the world. And therein, we produce a book of the week. Our latest book of the week is from Murray Gunn. You may remember Murray was an excellent guest previously, talking about technical analysis, particularly the Elliott wave analysis in the course of an IPO from last year. His book, published by John Wiley, Trading Regime Analysis, is our book of the week this week. It's a really cracking read for anybody who's interested in understanding better how things work in live action markets. It's based around fundamental human psychology, as is indeed the theory behind the use of technical analysis, aka non-fundamental economic reasoning. It's a groundbreaking book, work on how markets behave, driven by human nature, regardless of whether you prefer fundamental or technical analysis. The ebb and flow of volatility is the undeniable fulcrum of market pricing. By understanding cycles of volatility, the manifestation of human psychology as the ultimate driver of markets and volatility, all investors can profit. We've got links to that book on our exchangeinvest.com website and in our newsletters during the course of this week. And once again, it was a pleasure to have Murray Gunn as our guest. In fact, very early in the piece of IPOs, he was a guest on IPO-VID 009. And you can catch that wherever you're watching today, Facebook, LinkedIn, and YouTube. You can go back through our archives. They're easy to find, particularly on YouTube. Search IPO-VID. And 009 was Murray Gunn, along with, 118 other fabulous guests we've had on this show so far. Now, back to today's guest, Andreas Schweitzer. We're talking all about the wonders of trade finance, and in fact, trade finance as an asset class. And he's been elegantly defining how this can work and how there's so much exercise. So you're talking about control, Andreas, and I'm very interested here because obviously, yes, you say we have to check for invoices, we have to check that all the processes take place and so on. How much of that process these days involves a great deal of paper? How much of that process can involve more digital and electronic means?
A personal visit is the best thing. So you go to your warehouse, you make sure you do a physical inspection, and you look with your eyes and you hear what's happening. And other than that, of course, we try to digitalize as much as we can. But you still, warehouse receipts are often, they exist in both. We live in a world where some companies have already done a quantum leap to digitalizations, and others, especially on the small thing. A small manufacturer of something, why would he invest probably hundreds of thousands to digitalize his business? Will he ever make this back? And he says, look, it works very well on paper. So we would not exclude someone who deals properly in paper just because he deals in paper. To the contrary, we want to see that the process is okay and properly structured, and that is much more important to us than if it's digital or analog.
So have you had any instances where people have been trying to defraud you, and how did you deal with the process?
No, we touch wood. No, we haven't. We haven't had an accident yet, but earlier in my career, the bank I was living with, there was a fraudulent financing. It just involved fraud of various people. You often, to get this criminal energy, you cannot do this alone because there are too many checks and balances. But if you have the accountant, if you have the warehouse guy, if you have some other people, basically you create a group of fraudsters. I mean, look at what happens today in the world. Then if you put in enough effort, then many things are possible, also on the dark side of the range. But we just try to do small business, because if I do something with 5 million, it's 10 times less interesting than with 50 million. There was a big case with Trafigura, which you saw all over the place, and in the papers, where there wasn't in the containers, and in 500 containers, there wasn't necessarily what was agreed upon. I mean, I think the damage is somewhere 1.5 billion or something colossal. I mean, you can't do this sort of. This is organized crime, seriously organized crime, and it's a complete different range. If someone takes off a pallet of something which we would have bought, and that's insured, because you have a warehouse insurance, you have a transport insurance. So I don't want to sound arrogant, but we really don't have experience with recovering claims, because we turn down a lot lot of business.
Right. And again,
I would say 90% of the proposals we don't do, and not because they are not good, often because they are simply not ready. They are not investor ready.
Right.
They are missing so many people that they should hire someone to get their case together. That's not our business. We are not in the business of advising other people on putting the package together first.
Right.
You can't do everything. Yeah.
You're not a kindergarten for trade finance, but for those who are mature enough and adult enough to manage to be there.
There are a lot of wonderful trade finance advisors, and one will always have to check, are they worth their money?
Yeah. No, I mean, I agree. I mean, that's a whole different business, and there are those sorts of advisors who will come out and teach you what to do. It's very interesting. It's very interesting also how you discuss the importance of personal visits, the importance of actually going out, because that seems to be one of the issues. I don't know specifically about this Trafigura case, because that's all sub judice, so we can't speculate, but we do know the juicy facts of containers arriving which didn't have the precious metal therein. It's certainly a case where if you meet people face to face and you're dealing with people face to face, it's a lot easier to try and suss what are the problems, the flaws, and also you don't end up with the sort of Potemkin village failures of trade finance where people literally have said they have vast empires, but they've been nothing more than a facade with nothing inside.
that you get double invoicing. That's
Yes.
something the banks often were, that you have fake letters of credit. I mean,
Mhm.
document fraud is probably one of the big issues.
Mhm. So with document fraud, I mean, that's very interesting. I'm not asking for an expansive list of all the ways you can do this, but how do you check or double check major documents? I mean, obviously, one simple thing is to check that they look right and they don't look as if they've been mistyped, misspelt. We certainly have had a few documents like that of late. But how do you go through? I mean, how do you actually go to check documents? Can you go to the source with your position to say, did you issue
Yeah.
this letter of credit?
If you get a letter of credit or from a high street bank, from any important bank, you would call them.
Right.
And you probably would get two opinions, just in case the person involved in that department is part of the fraud.
Right.
So you would certainly try one or two routes, and if you have insurance, then of course it helps, because then the insurance company will have looked at the trade as well,
Okay.
and try to reassure that that things are as they are. Double invoicing is a big issue. Basically, the problem is someone puts a willy over your head and tries to get money from you for the same deal that he has already gotten money from someone else and given them the collateral.
Yes.
So
Yes.
that your coffee or your iron ore or your steel or your tea leaves, whatever you are in, have already been pledged to another lender.
Yes. Yes. Which we know is commonplace.
And the bag you hold is empty.
Yes.
But
Or
again, this is just, I think you have accidents and you have intentions.
right. And obviously, as you say, the ability to keep double checking all the way through the process helps you at all times to be assertive, and presumably also disincentivizes criminals from dealing with you, because you get a reputation for being the people who actually do check all of the paperwork.
Yes, I'm sure so do the large companies, and still they get caught, or they fall victim of an organized crime. But you know, it's rare. It's rare. I know it's juicy stuff. It's rare, but I don't know if you stopped at the little episode of the Kuwait stock market crash, I think in the early 80s. I mean,
Yes.
you know, there everybody paid everybody with a check. No one cashed in the check until someone decided I do. And at the end, you had a collapse, and I don't know, 6,000 investors lost something which would be few billions, tens of billions today, with a ripple effect. So sometimes it's also it's just negligence which ends badly. So I think vigilance is just a very good insurance. So just don't take the eyes off the ball.
Yes, and one of the things we see all times, and I mean, the Kuwait example is a great one, but when negligence meets greed, that seems to leave everybody without their grey matter seems to be left behind and disintermediated from the trades, and therefore you get all sorts of bubble greed happening and things go crazy, as was the case of, because the Kuwait stock market crash, remind me, that was a kind of letter of credit kind of product, if I remember correctly, that was investing in the Kuwait Stock Exchange or something along that.
It was unregulated stocks traded out of a garage in Kuwait, and everybody paid everybody with a check, which no one more or less cashed. It's just a really highly unregulated market. But those were the days. You know,
Yes.
today we live in what I would say in an over-regulated business. I mean, I
Yes.
find the way to do all business today has become complex and very expensive. The cost of regulations at a small firm like we need to have a lawyer in-house, that we need to have a risk manager in-house for the volumes we do. But this is what it is.
So, I mean, obviously that then raises the question, because the cost must be quite considerable for the firms as well when they're going into export. So does that become a disincentive for small firms to actually be exporting?
No, I think export costs or shipping costs have come down dramatically. I mean, they skyrocketed 2020-21 with the pandemic. Then you had during the Ukraine, you also had spikes of trade costs or shipping costs, but it's getting better now.
Right.
But I agree with you. I'm sure the world is rethinking, does it make sense to ship something from Finland to South Africa, or from India to Chile? Does it still make sense? Is my cost saving, is my footprint, my ecological and financial footprint still the same? And I think that's good news for the planet, and it's good news for each company. So local production is a little bit back in flavor, also because you want to reduce your political dependency. I mean, there's a whole discussion going on with China and the world about that.
And also, it's not a new thing. I mean, that's the other thing I find quite funny, because people talk about this as if it's some radical new thing. But you look at the Ford Model T and the Ford Model A cars, which were actually produced right across the world. I mean, Ford had a factory in communist Russia under Stalin producing Ford Model Ts. And in fact, the NASDAQ headquarters in Europe, in Sweden, in Stockholm, used to be the Swedish manufacturing plant for the Ford Model A. So I mean, we're sort of going back in a circle to where for many years people specialized at home and exported everything.
You teach me exciting things, and you should write the next chapter.
I'll be happy to. I'll be happy to collaborate with you in the future. I think it's such an interesting, but it's a very interesting business looking at trade finance as a whole. And obviously the thing which I suppose intrigues me then is, I mean, where you're sitting, you make a very, very elegant case for the fact that there is, if I may say so, you're in one niche of the trade finance opportunity, but it strikes me that as an asset class, there's an enormous opportunity for trade finance investors. It's just finding the right kind of fund intermediary, such as yourself, in order to manage to operate in those particular niches.
Yes, we are. I would say we behave like truffle hunters. We like to sniff where there is a good opportunity. And if we find this, and we spend a lot of time and money and effort on finding opportunities, because we're obviously not alone. Others, it's not a very high brain concept I'm sharing here. Everybody tries to get the best deal ever. But we are trying to get the best business concept ever and a repeat deal. As I said, the effort to find something is already significant. If I now have something, I want to replicate this as often as I can to reduce my risk, to increase, obviously, the returns, and to establish, again, a knowledge base in that market. Let's say Vietnam, where we are not today. So if I pick this country, I don't want to do one deal in Vietnam. I want to do every week a deal in Vietnam, and maybe not with one, but not with 100, maybe with 5 to 10 suppliers or buyers. And then I would put a team into Vietnam, and they run a profitable business.
And presumably,
so we need critical size, with other words.
Yes. So
it's too expensive. A spot transaction is often very expensive.
So, but it's not therefore the actual necessity. You can get in at a smaller size of transaction than, say, the AAA pharma companies who are doing zillions of dollars worth of business. But you're looking ideally for those transactions to be repeatable on a discrete basis throughout the course of a year, and therefore to find other people you can do similar kinds of business with in order to maximize the opportunities in each country.
You see, we like small deals, quick deals, and we don't mind the product. We are product agnostic, with the exceptions of fresh food. Banks want predictable deals in predictable time frame. They give you a line of credit, and you draw on it under the terms we agreed. They don't want green pillows today, yellow pillows tomorrow, no pillows on Friday, and garden hoses on Monday. This is not a bank wouldn't know what to do with that, except they give you, as a trade business, a line of credit. And this is where we try to come in.
Right. No, and it's understandable, because also The banks love it. If you mention, I don't know, the word Coca-Cola bottlers around the world, suddenly the banks will light up because they understand Coca-Cola and they understand the Coca-Cola bottlers network. But when you suddenly start discussing something that is a product, maybe soft drinks, maybe not, that involves a second degree name, the banks simply don't understand what you're talking about, even though that may be a cult brand in 1 or 2 countries.
Interesting what you say. There are a couple of very good soft drink brands in Africa, for example, in Kenya or Tanzania, who run a really good business.
Right.
We know the owners, but they have a very, very hard time to get financing. So at the end, you probably have to put in more equity into your business, and then the bank might say, okay, now you are more a safer credit bet and with more money, and now we lend you as a company money.
Right.
There's a lot of life is not fair. Trade is not fair. There's a lot of great opportunities, and it's about finding these opportunities and building them. And this is the model we decided to do for better or worse. If it's a good idea or not, life will tell. But at the moment, it's rather good.
I love that statement, though, you make. Life is not fair, trade is not fair. And that's so true, because I can think of, just you've got me going on soft drinks, I can actually think of 6 great mineral waters alone that all radiate from within 1,500 kilometers of where I'm sitting in Warsaw, Poland today, that are absolutely incredible, but they find it very difficult to export because they don't necessarily have a market overseas and people have never heard of them. Yet in their own home market, for example, in Serbia, Kniaz Miloš, or something like Borjomi, for example, in Georgia, they're absolutely cult names, Mushinyanka in Poland, and it becomes incredibly difficult, even though if you actually are a native or a resident in one of these nations, you wouldn't manage to survive going to a bar more than twice without hearing their name. And that's a very interesting nut to crack in the world of trade finance, because, of course, to a bank in London, they're just alien concepts that no one's ever heard of, as opposed to Coca-Cola or Pepsi-Cola, for example. So, I mean, we've talked about all of these issues, and you've gone through some of the opportunities in terms of ESG and trade finance and so on. And that's really, really fascinating stuff altogether, Andreas. I think I'm fascinated to hear from you, I mean, about the future of how you see your opportunities developing. And actually, I'm going to roll it all into one question, because I'm going to ask you all in one, Andreas Schweitzer, where do you think the capital market revolution goes next?
Now you catch me on the wrong foot, because I'm not a capital markets guy. I don't understand the stock market. I understand, of course, intellectually, but I only lost money on private equity and VC. So trade is my world. And that's why I put it in a book, that trade works. The revolution, certainly the fintech revolution, hopefully will go on in a dramatic way. AI will add to that development, because fintech for us, if we have easier ways of payment, if we have easier ways of handling transaction, that would be absolutely a blessing. If cash will disappear, this is a big discussion. Nordic countries pay more with digital. In the south, they pay more. Now, I don't think cash will disappear, and there is a company who produces ink for paper money. It seems to be a very high-tech product, and that CEO said a few months ago they have never sold so much ink than recently, the last 2 years. So people can only make money with this ink, so that ink must go somewhere. And other than that, I have to pass on this question. Sorry about that. I have no good guess for you where the capital market goes.
I think you've answered the question exquisitely. And in fact, I think you've answered exquisitely throughout the course of the show. As you describe yourself, Andreas Schweitzer, you and your team, you're truffle hunters in the worlds of commerce, and looking at how the fact that, you know, trade is not fair, the world is not fair. But nonetheless, the stunning number that jumps out at me today is you talking about a $3 trillion trade gap, if only we can better finance the opportunity for exports. And that is an absolutely great gripping number. No matter what your view on inflation, $3 trillion is going to remain a very, very, very large number for a long, long time to come. And certainly, I think during the course of our lifetimes, no matter how long we intend to keep living. And taking the trade, putting it together, creating TradeWorks as a trade finance investor, and therefore making this asset class. Those all seem to me to be the incredible opportunities of what is seen by many as a very opaque business, but you've broken down for us today beautifully in terms of how there is an opportunity, but nonetheless, those old traditional factors of meeting people, understanding people, talking to people, and being absolutely rigorous with the preparation of documentation and seeking documentation, double checking, triple checking the documentation remain factors which are vitally important, as does not rushing into a market where you simply lack the expertise. And in those senses, I'm very excited about the future for trade finance, no matter how digital it may be becoming, because it certainly strikes me that there's an enormous opportunity there. And in that enormous opportunity, I would like to say a huge thanks to you, Andreas Schweitzer, for joining us today. His book, TradeWorks, The Trade Finance Investor, is available online. It's absolutely a gripping read, ladies and gentlemen. If you're interested, a very, very useful, concise guide to the world of trade finance. So that is going to conclude our show for today. Next week, we've got an absolutely fabulous guest once again. We're going to be discussing going global, the birth of the CFTC, the Commodity Futures Trading Commission. And that's going to be with their, well, long-standing international doyen from the era of internationalization of the derivatives marketplace. I'm really, really delighted to see my old friend Andrea Corcoran. We're going to have a great chat about that. It's going to be the same place, same time. Hopefully we will manage to make that live. I'm sorry our logistics didn't quite allow for it today, but nonetheless, it was great to see Andreas Schweitzer in the studio. Let me just say thank you very much for watching this show. Please give us a like, ladies and gentlemen. It's really, really important. The AI bots of YouTube, Facebook, and LinkedIn love to see people liking content, and then they show it to other people. And we want as many people as possible to understand, for example, today, the opportunities in trade finance. My name is Patrick L. Young. This has been IPO-VID. Thank you very much for joining us. A huge thanks to our production team today, Jamil, Racy, and Rushelin, for their expertise. And most of all, huge thanks to our guest, Andreas Schweitzer. Go check out a copy of his books, TradeWorks, The Trade Finance Investor. Thank you very much for your time, Andreas. Thanks for watching the show, ladies and gentlemen. We look forward to seeing you all next week.
Thank you, Patrick. Thank you very much indeed.
You're welcome.